tax haven Germany for real estate companies.
If you are a foreigner and wish to invest in German real estate property, there are clever ways to do so and avoid taxes within the law. If a private individual wants to invest in real estate property in Germany and his worldwide income is significant, the total tax rate combined of income tax, solidarity surcharge and church tax can exceed 50%. Whereas corporations pay corporate tax, solidarity surcharge and trade tax, which can sum up to about 30%. In case corporations pay dividends to their owners, this will generally result in withholding tax or income tax on the owner's side. Here is a way to reduce your taxes by doing two things. First, apply for a trade tax reduction in Germany. Second, use a holding company in a low tax zone. The trade tax rate in Germany depends on the municipality your income is taxable. As the lever usually ranges between 200 and 500%, that means that a foreigner can save up to 17.5% trade tax when using a foreign corporation to hold German real estate property. The foreign company just pays 15% corporation tax plus 5.5% solidarity surcharge, resulting in a combined tax rate of 15.83% on such German income. If a foreign corporation just holds real estate property in Germany and does not set up a subsidiary or a permanent establishment, Section 9 of the Trade Tax Act provides an exemption so that this income is exempt from trade tax in Germany. In order to profit from that, an application with the tax authorities shall be made, which is applied to the enterprises which exclusively manage and use their own real estate or, in addition to their own real estate, their own capital assets, or look after residential buildings or single-family houses, two-family houses or freehold flats. For such income, which is allotted to the administration and use of the own land property, no trade tax will be assessed. It is also important that there is activity performed in Germany that will create a trade or permanent establishment. It is also important that there is no activity performed in Germany that will create a trade or a permanent establishment. Harmful activities in this sense are unusual special services which require a certain entrepreneurial organization and thus result in the commercial nature of the activity as a whole, such as guarding tasks, scheduled supply of electricity, assumption of cleaning tasks. The acquisition and management of real estate with the aim of developing and selling it later is also not favored because of its commercial character. On the one hand, taxes in Germany are important, but on the other hand, it is also important what is the tax situation in the country the owner is located. And also, if there is a double taxation treaty between the owner's country and Germany, which avoids or which reduces double taxation. A very favorable location for a holding company is, for example, Luxembourg. I have therefore asked a colleague of mine to report a little bit on the tax situation in Luxembourg. It's Jean-Pierre Verlin from Englewood in Luxembourg.
Hello Jean-Pierre, how are you doing in Luxembourg?
I'm fine, thank you. And you, what about Frankfurt?
Great, thank you very much. I have a question for you, Jean-Pierre. It's about real estate investing in Germany via a foreign holding company. And the question is, if you consider full central administration, substance and decision-making process in Luxembourg, would it be acceptable to structure the acquisition, management and the access process of a real estate assets from a Luxembourg fully taxable company for obtaining the benefit of the German corporate tax only, so that means without any trade tax consequence?
Definitively, that's a solution which has been already proven in the past, to the extent that you implement a fully taxable Luxembourg company, as you mentioned, with full substance, with local decision-making process, and with the right organization for proving that you don't have a German permanent establishment, you can reach definitively this final goal by limiting the tax impact with respect to the capital gain, the exit process, with respect to the assets that you are managing in Germany. But as you mentioned, substance is definitively the key point, and you need to demonstrate that you are taking any decision in Luxembourg, which means that you cannot delegate the day-to-day business, the key decision in Germany, because if you do this, you will be requalified as a German permanent establishment, and you don't get the benefit of the trade tax limitation in Germany. So definitively, it's a solution, sustainable, which can be set up easily, but with a careful approach in terms of substance.
Okay, sounds very good. And how do you organize the coordination with the German advisors?
So here's the point: we need to contact our German colleagues upfront by explaining what is the purpose, what is the structuring process, and how to liaise with us in order to assist the client, in this case the Luxembourg company, with the German tax authorities, coordinating together all information and all argument that you need for sustaining the evidence that this is not a German permanent establishment, and definitively the decision-making process is organized in and from Luxembourg.
Okay.
Most important, good last argument as well, when you work with a German facility manager who is generally in charge of monitoring the day-to-day, I would say, business with the facilities, you can do it, obviously, because you need local presence, but you will be obliged to report always to the decision makers based in Luxembourg, always for justifying the substance. That's very important.
Okay, and of course that facility manager should not be your employee working in Germany.
Absolutely. It should be an independent person, obviously not related to any advisor in charge of the structuring and the monitoring.
Okay, yeah, thank you. And if we are lucky, it works like the one client which we have together, where this perfectly works. And hopefully we can help other people to do the same thing and save trade tax in Germany.
Absolutely, because in the case you mentioned, without giving the name obviously for obvious reasons, we analyze together upfront the best structuring process for reaching this goal, and working together we have been able to first demonstrate the local substance, and you have been able to demonstrate to the tax authorities that we can get the exemption of the trade tax, which means a substantial tax benefit for the client since it's complying with all requirements we mentioned before.
Okay. Well, thank you very much. It was nice talking to you. All the best to Luxembourg. All the best to you. Thank you and bye-bye.
Thank you. Bye-bye.
Bye.
Bye-bye.
Back to Germany. Moreover, I would like to comment on the substance requirements from a German point of view. It is not advisable to just set up a letterbox company abroad. The minimum requirements as set by the European Court of Justice are that the company should play an active role in the economic life of the country of residence. This is normally done if it has its own staff, a fixed office and office equipment. It has just been ruled by the European Court of Justice that a Cypriot pure holding company fulfills the substance requirements if it resides in the office of another company and uses staff of another company. Its only own staff member was the managing director that just took over administrative tasks. Therefore, it could be advisable in the future to just employ a managing director who performs administrative tasks and get other staff, office and office equipment from another company. Too many details? Do you need help in implementing this? We are waiting for you. See you next time. Bye.